And additional 41,000 crores were put as an extended lifeline to PSU banks as part of their recap program. The recap is to revive banks under PCA. Some banks to exit PCA post to recap because it would help with their financials. 4 to 5 banks may be out of the PCA in FY19. The government is expected to pump more funds to lend, and the capital cushion is largely to help the weaker banks at this juncture. You have the NPA situation, which the government expects to improve in due course. So let's discuss that at length, and we list out the banks under PCA versus those not, and how this additional lifeline can help some of the ailing banks come back to life. You have Lalita Srivastav, AVP Research BFSI at Sharekhan, joining us on the show. We also have a noted industry voice, Pradeep Chaudhary, who's former chairman SBI, joining in with his perspective, and Dr. Pranav Sen, former member Planning Commission, is also part of this discussion to give us his views. Mr. Chaudhary, let me start off with you, sir. Good morning.
Good morning.
How are you looking at the roadmap on this plan being executed to bring some banks out of PCA?
No, it's a great affirmation of faith of government in PSU banks, and that would also generate additional faith among the depositor community and also the investor community. This was this path was set by the government a few months back, but it's gratifying to see that they are putting the real cash into this. So this is very great, as I said, affirmation of government's faith, and therefore people need not have any apprehensions about the future of the PSU bank, and they will become stronger and they can pursue their business plans and function in a very useful and productive way.
Dr. Pranav Sen, just want to get you in as well onto the discussion. And good amount of capital infusion will be given to PCA banks. Do you think PCA norms should be relaxed, or do you think that PCA on PSU banks were the need of the hour and have served their purpose?
Yes, as I said, that's the reason why I said that much will depend upon how the additional recapitalization funds are distributed among the banks. Now, one of the reasons why the demand for relaxation of PCA norms was being made was the simple fact that you had a large number of banks who were not meeting the norms. With 41,000 crores, you're not going to get all of them over the hump. So you probably would have to be selective.
Right. But Dr. Sen, the government has announced that 2.11 lakh crore rupee capital for FY18 and 19. Do you think PSU banks would need more government capital infusion in FY20 as well? I mean, is this going to be a never-ending story?
Well, yes, of course, they need more. The thing is that eventually, as the economy grows, and if the PSBs are supposed to grow along with it, then they not just need capital, they actually need equity capital. Because one of the constraining factors is the promoter's equity, common equity. So unless the government is willing to dilute its holdings in the bank, they are going to have to stump up money for shoring up the equity further.
Right. Mr. Chaudhary, for somebody who has been in the thick of things in the past, how would you look at how much can these series of fund infusion really help ailing banks? At the end of the day, at the end of the other spectrum, you have to have an improved lending culture and good checks and balances in place. Or do you believe that we've seen the worst of the NPA cycle, and with the NCLT cases underway, with the implementation of IBC, that we have seen the trough when it comes to the bad loan cycle, and things are only going to improve from here? So this is the right time to support the banks.
Actually, if you look around the world, the cost of capitalizing the banks, because no country can afford to let go its banks, even when the banks are not state-owned. For example, the RBS in England, the government of England put in money, because in the absence of that, there would be loss of public confidence and deposits will flee. Now, basically, I think it takes about 2 to 3% of the GDP to recapitalize the banks. So from that perspective, I think we would need a total of 4 lakh to 5 lakh crores. And now your question that how long we do it, the question is, if you don't do it, the consequences would be far worse. It is like a patient being taken for an operation. The question can be, will the operation succeed? What is the guarantee? There is none. But if you didn't do the operation, the patient is sure to die. So that is the kind of dilemma, and I don't think the government of the day has any choice but to recapitalize. And how it would shape out in future? Because banks are a function of the economy. They don't have a light of their own. They are like a moon. They reflect the light of the sun. So banks would be a function of the economy. So it will depend how the economy functions, how the growth is, and how the earnings pictures of companies are. So that is how it will span out. And for example, the most important thing that needs to be fixed is the finances of the state discoms, because that is where the banks have taken the biggest hit, though SBI did not take a significant hit because we kept away from this. Now, in case this loss is not made good, A, the bank's finances will deteriorate, and secondly, the discoms would be off credit. They will not be able to access any source of funding. So it will basically depend on the growth in the economy.
Right. Lalit, I want to get you in as well onto the discussion. Your view on PSU banks now that both PCA as well as and non-PCA banks as well, and from an investment perspective, do these new norms change anything?
Hi, morning. So, for an investor, one would not only look at the present circumstances, but would also would be looking at the quality of franchise and the business that you are acquiring. So at this point of time, there is even if there is some amount of dilution or relaxation in the PCA norms, which would be taken as a welcome move by the market. But our sense is that at this point of time also there has been a recognition, there has been a resolution, there has been a recapitalization. All these things have been taking place. But an important part would be to upgrade and reform the underwriting processes as well as the business processes of these PSU banks. That is another step, and a very crucial step that needs to be taken. It has to be seen through. So at this point of time, our sense is we are still maintaining a cautious stance on most of the PSU banks except State Bank of India. And we believe that with news like these or event specific times, there would be trading opportunities, but for serious long-term investment, one would be better advised to wait in most of the PSU banks as of now.
Right. Mr. Chaudhary, I wanted to understand from you that, while the big banks have still held out, which is SBI, Bank of Baroda and the likes, what does this mean for some of the smaller banks? And, with all that plan about consolidation within the PSU banking space, how do you think this recap program helps these banks, build their financials on their own without the question arising of them combining their balance sheets with another bank?
This is like oxygen. So if oxygen is not given, the patient will not get up from the bed and will not go to work and earn. But PSU banks, once they get this tranche of capital, have also to, reorient their activities. I find PSU banks, the biggest advantage is low cost deposits. Now that needs to be sustained. And apart from SBI, I think other PSU banks don't have a big ATM network. So how do you service the savings customers unless you have an extensive ATM network? And even SBI, I'm quite disappointed, has put, these minimum balance charges for accounts in the cities and metros. Now, these are the people who were the most loyal customers of the bank. You have private banks offering 6%, 5 to 6% on savings deposit, but they have not gone anywhere and they have stuck to the PSU banks earning only 3.5 or 4%. Now, this loyalty or this support should not be taken for granted. So PSU banks also have to, reorient their activities. And secondly, if you look at the PSU banks, they don't offer anything significant to the customer. Now, most of them don't have a credit card product. Now, if a person has a 10 lakh rupee deposit with you, now why can't you offer a 50,000 or 1 lakh rupee credit card? It is only as a standby arrangement. So PSU banks also have to, instead of making this announcement that we are so many lakh crore assets and this, they have to reorient and see what they're giving to their depositors. And on the lending side, I think PSU banks are being a little fussy. They are only looking for higher interest rate. But they should remember that a low-risk customer would not pay higher interest rate, so they have to lower their return expectation in order to get in good customers. If you look at the base rate, even between the SBI and associates, associate banks always had a 50 basis point higher base rate than SBI. And I used to try and persuade this managing director that you lower the base rates, but all the time they would say, no, this will drop our net interest income. Net interest income comes from volumes. And secondly, in the banking industry, please remember that when you have better quality, you will have low returns. So in this trade-off, I think the PSU banks must go for higher quality, lower risk, and also expect lower returns. So once that happens, once the earnings are restored on a steady pedestal, then only the bank. But it is going to be a long haul. It is not an easy process, 4 to 5 years of consistent functioning. But at the same time, all hope is not lost. Please remember that, some of the PSU banks like PNB made an IPO at 40 rupees and where their prices were. The Canara Bank made an IPO at, I think, 20 or 30 rupees. Union Bank made it 20 rupees. So all the PSU banks in good times have given good return. But these are catastrophic times, and even the corporate-facing private sector banks have incurred losses. So therefore, they have to see what their private sector peers are doing well and try to imitate the success stories.
Fair point. Dr. Sen, that brings us to the next question then. How crucial do you think it is for the government to dilute stake in PSU banks?
Well, I am not necessarily a votary of privatizing the PSBs. So my judgment would perhaps be a little biased on this. But frankly, nothing really changes if the government dilutes its stake down to 51%. Anything lower than that, of course, becomes an issue. It becomes a political question. And I think in an important sense, it also has a bearing on how the public at large sees its banks.
Okay, closing thoughts then, Mr. Chaudhary. You have just reiterated the fact that this is a long drawn-out process. Then there's a fair amount of operational efficiency that PSU banks need to build before they can, actually convert all this capital infusion into profitability, so to speak. So the road is long. But my only question is, where will it stop? Where will the buck stop in terms of these follow-on capital infusion rounds coming in? Because we've seen that time and time again in the past, and it just doesn't seem like it's stopping. One series follows another.
No, I think that is not a fair description of the situation. In 1999-2000 also, the gross NPAs had touched 10%. But then, as the economy took off in 2004-05 and the PSU banks did capital issue, they gave huge appreciation in the return. So therefore, it is not necessary or it is not useful to be despondent. I think these are cyclical processes, and once the cycle turns, then the bank's fortunes would also turn. But this time around, they have to avoid the mistakes of the past and be more focused in their service to the customer and to the different segments. And regarding the 51%, only thing that, to my mind, attracts deposit to the PSU banks is the legend there a Government of India undertaking. You take it away and the deposit franchise, I would not say collapse, but would be significantly dented. Maybe not explicit, but implicit comfort to the depositor, they stay invested in the PSU banks. Now, if this is taken away, I think the very reason deter for their existence would be in jeopardy.
And finally, Lalitabh, just because it actually boils down to specific stocks, and you've highlighted some of the names for the benefit of our viewers, can you summarize where would the opportunity arise because of for this fund infusion versus where you would be circumspect?
So I actually didn't understand what exactly you wanted to know.
Stock wise, out of all the banks which are under PCA, where do you see opportunity? Which are the banks that you're bullish on versus those which are where you're bearish?
Okay, so as I have also said that we are cautious on most of the PSU banks. There are some pockets wherein you might see some improved performance. Bank of Baroda is one wherein we see that there can be some amount of capital infusion also happening. The performance of that bank has also been quite satisfactory, and but the overhang on that is the proposed merger, how things happen and how things take shape after that. That will be interesting to look at. Apart from that, that 4 or 5 PSU banks are below the capitalization levels, so obviously they are going to get capital. So the list is there. My sense is and our sense is that they will continue to have trading opportunities, but look at long term on a long term investment part. I think we are still advising on SBI only at this point of time.
Okay, thanks, gentlemen. Thanks very much, Dr. Sen, Mr. Chaudhary, as well as Lalitabh, for taking us through your thoughts on the PSU Bank recapitalization program.